401k is now the biggest financial myth in the modern economy. It's being pitched as this safety net that you can have, or some sort of golden ticket to retirement, and even pitched as the ultimate tax saving hack. But let's cut through all this marketing. When you look at the architecture of the 401k, it isn't just some wealth building tool. It's a system designed to lock your capital into an institutional hands, limit your choices, and put you at the mercy of a government tax policy. And it can change just in a dime. If you want to be wealthy in 20 years, you need to stop acting like an employee and start acting like the banker. But right now, you're doing the exact opposite. You're handing your paycheck essentially to a massive financial institution, locking it in a box and hoping for the best. And that's not a retirement plan. That's just utter surrender. So today, we're going to dismantle the 401k and show you why the math is stacked against you. And I'll go ahead and lay out a blueprint for regaining control of your capital. Now, the institutional feeder, why the system loves you. Let's start with the most uncomfortable truth. The 401k exists to feed the institution, not the individual. I want you to think about it. Why is this the default retirement vehicle? Because it creates a guaranteed monthly stream of capital for the largest investment banks and fund managers in the world. Now, your employer takes money out of your paycheck and funnels it into mutual funds that charge management fees. And they do this regardless of how those funds perform. And that's whether the market is up 20% or down 20%. Those institutional managers still get paid. And right now, you're being conditioned to accept the set it and forget it mentality. And this kind of thing creates a lazy investor. So when you don't have to choose your investments and when your money is automatically deducted, you stop paying attention. And this system relies on your apathy. If you were actually managing that money in a private brokerage account, you'd be forced to look at these fees and look at the returns and the underlying assets. But in a 401k, the complexity is behind a wall of HR compliance. And now you aren't really investing, you're just participating in a system where the middleman is guaranteed a profit before you even see a single cent of growth. Now, I want to talk about my next point here, which is the myth of the free match. Now, people's most common defense with using a 401k is, oh, but my employer matches my contributions. That's basically free money right there. Well, let's be honest with ourselves. There's no such thing as free money. And that match is part of your total compensation package. So if your company wasn't paying you into a 401k, they would be paying you in salary. But they prefer to choose the 401k match for a reason, because it's essentially a golden handcuff. When your company matches your 401k, they're incentivizing you to stay. They want to keep your capital locked in their system, and it's just some tool for employee retention. It's not really a tool for your wealth building. Now, if you were getting that same money in your paycheck, you could invest it into an asset that you can control, or some asset that has liquidity, or an asset that you can actually use to grow your own business or your own portfolio. And the match is essentially a bribe to keep you compliant. And the cost of that bribe is your freedom. The next thing we'll get into is the illusion of safety and lockbox penalty. The most common defense of the 401k is that it's safe, but let's define what this safety actually means. To most people, safety is the absence of risk. But in finance, the biggest risk is the loss of liquidity and the loss of control. Now, your money in a 401k is in a lockbox. You can't touch it without massive tax penalties and a 10% penalty until you're nearly 60 years old. And if a major life event happens, maybe a recession, or there's a business opportunity you want to capitalize on, or there's a personal crisis of yours, that money is dead capital. You can't use it. So you're essentially trading your freedom for a promise that the market will be stable in 40 years from now. But look at the history. We've had multiple market crashes in the last 3 decades. And if you're nearing retirement age and the market takes a dive, you have no pivot strategy. You just gotta ride it out. Now, real wealth is not about having a number on a screen that you can't touch. Real wealth is having access to capital when you need it. Now, by locking your money away, you've opted out of the ability to react to the economy. You're outsourcing your survival to a system that prioritizes institutional stability over your own personal growth. Now, I want to talk about the math of opportunity cost and velocity. So this leads to the concept of opportunity cost. We are taught that compound interest in a 401k is the secret sauce to wealth. But I want to tell you my secret. Compound interest is just simple math. It happens in a regular brokerage account, a business, or a real estate investment, just the same as it happens in a 401k. But the difference here is velocity. If you put $1,000 into a 401k index fund, you're getting an average market return. And that's fine for the average person, but if you take that same $1,000, invest it into a skill, a small business, or an asset that you can actually control, then you're not waiting 40 years for a return. You're building cash flow today. Now, while you're waiting for a 3% or 7% return in the passive fund, you're missing the chance to earn 30% or 40% or 100% on a project you actually run. And the 401k demands extreme patience. But in the modern economy, patience is often just a fancy word for missing out on the best deals. Now, when your capital is tied up, you're not an investor, you're just a spectator. You're watching the game from the sidelines while others are actually playing it. Now, let's talk about the biggest trap of all, the tax lie. People defend the 401k by pointing out, oh, the tax deduction. You know, they say, I'm saving money by deferring my taxes. Now, I want to point out that this isn't tax savings. It's just a tax deferral. You're not avoiding the tax bill at all. You're just kicking the can down the road to a time when you might be in a higher tax bracket or when the tax rates across the country have inevitably climbed. And the government gives you this tax break because they want your money locked into this system. It's a trade-off. They give you a small, immediate incentive, and in exchange, they get total control over when and how you pay up later. Now, there's no guarantee of all of us reaching 60 or retirement age, but when you reach retirement, or if, you will be forced to take RMDs, which are required minimum distributions. Now, these withdrawals do count as taxable income, and you have no control over your tax bill in the future. So you're building a tax bomb that will go off exactly when you're old and you don't want to work anymore, right when you're trying to live off your savings. And by the time you get that money, you might find that the government has changed the tax code, maybe raised the rates, and now they're taking a massive chunk of the money you spent decades saving. Now, if the 401k is a trap, what's the alternative? Well, with Modern Money Solutions, we like to promote that you need to move from a mindset of saving to a mindset of allocation. You just got to stop looking for a retirement date and start looking for an income machine. And this starts all with liquidity. You need an emergency fund that's just not sitting in a low yield bank account, but in a high yield accessible vehicle. Now, once that's set, you stop dumping money into a black box. You look for investments that actually provide cash flow right now. And these could be like high yield assets, investing in your own side business, or acquiring assets that produce a monthly return. The goal is to build a machine that pays for your life today. And this requires a lot of discipline. It requires you to stop listening to the generic save 10% of your paycheck advice from HR and start treating your finance like a business. And we're really big on thinking like a business in this channel. So a business doesn't keep all its cash in a lockbox, and a business keeps cash available to pivot, scale, and reinvest. So you become the CEO of your own life, and you should start acting like it. Now let's start taking command and get into this operator mentality. Now, we've already covered the illusion of safety, the lost opportunity of locked capital, and the tax trap. Now, you need to decide if you're a passenger or you're the driver. The 401k is built for the passenger. It's designed to keep you steady, compliant, predictable, but you're not here to be predictable. That's why you're watching this video. You're here to build real sustainable wealth. Moving away from the 401k model does not mean you stop investing. It means you stop being lazy with your capital, and it means that you take the time to learn how these markets work, how to identify the value in them, and how to protect your own interests. Everybody around you and the whole financial system is designed to keep telling you to just stay the course, play it safe. But if you want to win at life, you have to stop playing by the rules that were designed to keep you in the middle. Your money should be working for you today, not just waiting for a future that may look very different than the one in the brochures promised to you. So I want you to take control of your money and take control of your life. Now, the question is, are you ready to stop letting the system manage your future, or are you going to start managing it for yourself? Let me know in the comments below, and I'll see you guys on the next video.